Dream Investing with just an intraday analysis of the stock market. Today is February 16th, 2024. So let's start. First, looking at the dollar, DXY, on the 30-minute chart. As we can see, we had PPI data today, which gave us a little bit of a pop around 8:30. But what I'm noticing is a breakdown below that PPI data pop, right, which was around 104.37 area. It broke out, reaching a high of 104.67 area. We've sold off, and right now are trading just below it. In fact, we closed on the last 30-minute bar. We actually closed below the 104.37 breakout area, So that is telling me right now that the market has more than digested it and does not seem to find the PPI data to be a problem. That is actually bullish for the market, right? Especially this weakness we see with the dollar is bullish for the market, because generally a weaker dollar is bullish for risk assets. So that's a good sign right now, especially if you're one who wants to go long and put on some risk. This is a good sign for one who wants to do that. When we look at the US10Y, actually looking strong, still looking strong, after PPI data. Though it came back to the breakout level and has received some buying right now. But still, the dollar is still telling us that weakness, that the PPI data has been absorbed and market participants are still bullish regardless of the PPI data. The 10-year, on the other hand, though we've had a little bit of a pullback, we're getting a buy right here, is still trading close to its breakout area zone, right, of 4.287 area, So I'll put this more in the neutral zone right now. But it's still, the dollar weakness is still a sign that there's chances that 10-year could also weaken, follow the dollar and weaken. There's a chance with that, Look at the 2-year. The 2-year is looking strong, actually stronger than the US 10-year. Actually came back as well to its breakout area, received some buying, closed that gap, received some buying. So it's still right now in the neutral area. Let's look at the US 10-year Japanese yen spread. Also strong, similar trading pattern, came back around its breakout area, receiving some buying. But the dollar price action, to me at this point in time, screams that, this market is more likely than not to head higher, So right now I have a bullish bias, mainly because of the dollar price action, and also I believe that the yield price action should follow the dollar price action in the near future. So if we're playing this bullish trend, I like Apple. That's one name I like. It's performed very well. It's outperforming the market right now. Down just 0.47%. If you look at the Apple QQQ ratio, we can see Apple is performing the QQQ by just 0.012%. If we look at it on the weekly chart, monthly chart, nothing much to see here. We do have a little bit of a bullish divergence though that is setting up, that is slowly developing on the Apple QQQ ratio chart. Let's look on the 2-hour chart. Looks solid on the 2-hour chart. We have a bullish divergence for the Apple QQQ ratio. This is telling me that Apple should outperform the Nasdaq in the near future. So let's look at another name. Let's still look at Apple though. Let's look at Apple SPY ratio chart. Now that looks weaker. Let's look at the 4-hour chart. And again, yeah, we have a bullish divergence as well that is setting up as well. Let's look at it on the weekly. Coming into it's revisiting the 200 simple moving average support on this ratio's weekly chart. We visited the support around January 29th. We've come back right down to it, potentially making a double bottom, right? While simultaneously printing a bullish divergence. You know, if we break out to the upside and this bullish divergence with the AAPL SPY becomes official, you know, which means that Apple is more likely than not to outperform the market. So back to Apple, we have this is actually a bearish price pattern, you know, a head and shoulders pattern. But generally, I'm not one to actually play these type of patterns to the downside. I believe that these patterns can be very powerful bullish patterns. And as long as we break, right now I'm long Apple, but as long as we can even cross or even touch the 190 area, that'll be a time to really put in even more funds towards Apple. I believe we can easily visit 200 area and head much higher from there. Okay, looking at Netflix. Netflix looks solid as well. Another solid name to play if you're along the market. You know, had very fantastic earnings, gapped up, has traded sideways, made new highs since those earnings, and I'm looking for this to visit the 620 area first, and then from there visit new highs of close to about 690 to 700 area. Let's look at LULU is another name that I like. Falling right down to the 100 moving average. We have a bullish divergence that is also setting up as well. You know, let's look at the 30-minute chart. On the 30-minute chart, we also have one that should set up as well. You know, it's basing right here that is also slowly setting up. Back to the 2-hour chart, we have this bullish divergence here. You know, so we have a nice bullish divergence setting up on the 2-hour chart, on the 30-minute chart. On the weeklies, it's pulled back down to the 20 MA, which is good support level. On the daily, it's pulling back to the 100 MA, another solid support level. LULU had also great earnings, you know, gapped up, raised guidance for the rest of the year. I'm expecting this stock to head right back to the 516 area and then make new highs, especially as the dollar weakens. So again, this entire bullish thought pattern I have is dependent on the weaker dollar. And with the price action of the dollar today, especially again with the dollar basically nullifying that bullish move we had with PPI data, I'm expecting the dollar to continue to head lower, and I'm expecting US equities to continue to trudge higher. Thank you, and that's it.